Welcome back to the Milwaukee Market Update. We're covering real estate news and data and breaking it down to help you understand how it impacts your real estate decisions. Teaser, 6% real estate commissions are gone.
Gone?
Gone?
Gone. What to take away this episode, the NAR settlement, how this will bring more professionalism to the industry, and why we're excited about this new ruling. A stable market. What does that mean? It means it's predictable. And we're also going to go back in time. Ty had a time-traveling adventure, taking a historic walk down Milwaukee memory lane.
We're here to give you the info you need to make the right decisions regarding your real estate. Should I buy a home now? Should I be selling? Is the housing market about to crash? Are these headlines I'm reading, content I'm seeing on social media true or even relevant to me? If you're new to the show or return because you found value in our previous videos, it would mean the world to us if you could please take a second to subscribe. Leave us a 5-star review on Apple or Spotify. You can follow us on TyAsh31, Nick Harrington28, and reach out via MilwaukeeMarketUpdate.com. I'm Ty.
I'm Nick.
With Houseworks Collective at Compass, your local real estate experts. Well, with that, let's do some quick tips.
Yeah, cool.
All right, starting with some buyers. What do you got for us?
Buyers, I think now more than ever, it's probably important to start your process interviewing agents. We're going to talk a lot about this today with the NAR settlement. That's going to kind of be the main takeaway of this episode. But the historical process of going to see a home, meeting your agent there is going to be different now moving forward. How your buddy bought a home a year ago versus what's going to happen later this summer and fall and on forever is going to be different. So it's incredibly important where if you are considering buying a home, start that process by interviewing agents. And what are some questions that you would ask in that interview process?
Questions I'd be asking my agent is, can you give me an overview of how the buying process works here in this area, in the state? I want to know what's their actual unique value that they're providing. Are they a hustler? Do they have access to off-market properties? Is negotiating their strong suit? And finally, how much will they be paid? When? How? And how are they going to negotiate to make sure that your closing costs are as low as possible? I think those are the core three things that I'd be looking at if I was buying a home, trying to find an agent to represent me today.
Yeah, I think that's good. And I always advise my clients that they should be interviewing other agents. Obviously, I hope they all work with me, but I'm not a fit for everyone. I'm not naive enough to think I am. How I always explain it is you want to work with an agent that first off you like, but also that you feel is going to get the results that you need. And that's going to be different for every person based on what it is that you're purchasing and what kind of building or property or home. That to me is probably the most important part. You have to gel with that person. They don't have to be your best friend, but they have to be someone that you feel like can get you what it is that you need, and you feel confident enough to help guide you on this journey.
Absolutely. Pivoting over to our homeowners out there, let's talk about live CMA. And you're like, what the heck is that? That's an acronym.
What's a CMA?
What's a CMA? So
KPI.
That's a comparable market analysis. Now, the live portion of it is if you've maybe sold a home before, or maybe you have a good agent that's being an advisor for you, keeping you updated on your home's value. A lot of times the comparable market analysis is a point in time that just shows you what's happening in your neighborhood with active new listings, things that go under contract and sell. So you can keep a pulse of what's going on in your neighborhood, in your greater area where your home is for similar type properties. The live CMA is essentially you get to look at your neighborhood as if in the eyes of the buyer, but you're the seller. So you're just keeping a pulse on what's going on in my local area. And knowing that you're getting set up with this with your agent, they're watching it too. You want an agent that's very familiar with what's going on in your area. This is not, hey, we're going to step back into your life 5 years, 10 years from now. Real estate agent should be an advisor for you that you have multiple conversations with every single year as you potentially come up on future life moments.
Yeah, I like this for two reasons. One, it's always kind of fun to creep on what your neighbors' homes look like, especially if you're driving them by it every day and you're like, what's inside there? But also, your home is typically one of the biggest investments that you have in your life. And in terms of you own a home for 20 years, you're going to have some significant equity in that property. And typically on a balance sheet from a personal standpoint perspective, it's one of the largest parts of someone's financial wealth. And so it's always really good to just have an understanding of what does that look like? What is my home worth day to day? And having a live comp approach like this does a great job of that.
You probably talk to your CPA twice a year. You probably have a app that tracks your 401k or maybe some other investments that you have, and you can look at any point in time what's going on with that investment. Your home should be no different.
Exactly. All right. Anything?
Investors?
Yeah, investor, quick tips. I would say prioritize your criteria. We talk about this a lot of prioritizing what your buy box is, but more specifically is what is your goal in your next property? Is it cash flow? Is it you're going to hold this for 10 years, you don't need that cash flow, and you just want to have a good nest egg of appreciation a market's going to have?
Yep.
But prioritize whatever that is and go in on that. A deal is never going to have all of them. You're never going to have cash flow, no risk, and high appreciation. Unless, and if you find that deal, let me know because we'll take that all day.
Yeah.
But prioritize what's important for you. And if you need help with that, talk to one of us or talk to an agent that you work with, because that's going to help you to decide when to strike and how much to strike with in terms of what that offer looks like. And it's also going to create this feeling of, I call it deal fatigue, where if you're analyzing every deal, then it becomes just overwhelming. You get that feeling of FOMO that you're losing out on opportunities, and narrowing in on what is important to you is going to help to minimize that effect of crap, I'm missing out on all these deals here.
Yeah. And I think sometimes people fall victim to, I have X income per month I'm trying to replace. And the fastest way I can do that is buying as many cheap properties as I can that generate cash flow. However, typically what I find that people lose sight of is cash flow usually goes up in time as the years go on that you own a property, and it compounds. You could buy nicer properties, fewer properties that grow in cash flow and everything else over the years, as opposed to buying a bunch of headaches. If you're a high income earner and you're buying a bunch of tiny little properties, that's not going to be worth your time, the pain in the butt that it is to manage them, versus buying fewer, better properties that over time will replace your income as cash flow grows at year 5, year 10.
Love it.
Fantastic. Well, with that, let's dive into some Metro MLS stats as construction is still going on in the background here. It sounds like a bee is buzzing in my ear with the sawing in the background. But with that,
all for it.
Yeah, all for it. We're going to roll with the punches here. So let's dive into our market overview here. I'm just going to go through these stats kind of in the buckets we've gone through before. First, starting with new listings, pending, and closed sales. So last month, February 2024, new listings were 1,100, up 9%. Hey, 9%? It's good. Needed. Pending sales up 3% versus last year. Closed sales up 7%. I think that might be the first time we've seen the trifecta in a while. Again, new listings lead to listings going under contract and eventually closing. That's some positive momentum, but it's almost, if you are trying to, I know last month we were talking about the Super Bowl. Essentially, you came in, it's week 1, and you beat the reigning champs that won the Super Bowl last year, but they cut their quarterback, running back, and all of their key positions because there's literally no inventory last year. And now we just have slightly more.
Yeah. Seeing up 7 is awesome, but it also means that we're looking back at historically lows. Mm-hmm. So it's better, but it's still low.
You remember when a few months ago when I was like, oh man, the only article that's going to be in real estate is lots of new listings and lots of, but not talking about closings because they were always talking about how closings are down and that means that real estate's bad and it's not doing good. Well, I think we might have that article overshadowed that I was expecting to come of, the glutton of inventory is coming. But next up, specifically probably more fixated over on those sellers that are out there in the market. So days on market until closing. Right now we're sitting at 36 days versus 29 a year ago. That's up by a few days. I would not be too fixated on that number. Again, this is for the time that it closes, meaning you put your home on the MLS today and you are moving into potentially your new home, your new opportunity within a month. That is a very fast time frame. Median sales price, $292,000, up 6% versus a year ago. We had one blip in, I think it was last month or the month prior, where we saw a negative number, like the first negative year-over-year median price. That's definitely an outlier. I think we're going to continue to see this up 6 to up 10% like we've seen the last 3-4 years running. Average sales price, $348,000, up 8%. Percent of original list price received, or that percent under ask, in February was 97.8, which is down 1% from a year ago. We've seen that pattern kind of continue to go on of the percent over ask has been less aggressive, but still exists, especially for that top third of inventory that's really nice, really well marketed. There's that emotional factor that will still get that trending up, but there's definitely a lot of properties that are trading at the list price, where some agents are getting closer to the pin, or they're maybe expecting it's going to be a big bidding war. Some of that might be because there's more options for buyers, and everyone has that flocking effect of, here's the best one. Let's all 14 of us go to one, and you have this other one that's like just slightly not as good, and there's like one offers. Or two. Yeah. So, but that's really hard advice to give somebody is, oh no, this one's perfect for you. Let's take the one that's almost perfect. That's always tough. Then you have that whole flock swarms up the next weekend. And then inventory, also positive, obviously with the new listing momentum we've had. 1,900 homes available, actively listed on the market, up 4% versus a year ago. And months of supply, relatively flat year over year, 2.3 months of supply versus essentially 4 months would be considered healthy or balanced, so still firmly in a seller's market. We always like diving into new listings, closed, meaning sales, everything else. Anything that like stands out that you want to poke out on a little bit more?
When I look at this, I still feel like we're definitely in a seller's market, but to me, the main indicator that I like looking at is how strong is buyer's demand. Because as soon as buyer's demand drops off, still there's this shortness of inventory on the listing side, but there's still more demand than there are listings available. Yeah. And just looking at these key metrics here, I like seeing new listings popping up. Granted, it is only February data, so it's still relatively low. Spring market is probably happening like, what last podcast we said it was happening then. The listings aren't quite showing that yet, but if we look just historically, it's like March is when we see a significant spike in listings. But I still see that there's a lot of demand from the buy side here because we have new listings popping up. We have sale price remaining growing still, and then we have months of supply maintaining flat. So we have new listings that are popping up more than last year, but we still have these properties getting scooped up just as quickly as they used to be historically. So I still feel like if I had a crystal ball, we're going to continue into this market of strong demand from buyers in a competitive scenario for home buyers right now.
I feel like some agents I talk to are surprised every year, and we should never be. And I definitely feel like buyers are also always surprised that they start their search around this time of year. It's like, it's spring, it's nice, I want to go look at some homes. We only had 700 new listings in December. And we'll get to about twice as many new listings probably here in the month of March, and then almost twice as many as that month, almost getting up to 2,500, 3,000 as we get to the peak, middle of the year, June, July, which is crazy when you think of there's almost 4 times as many homes available in June, July versus there is in December.
Yep.
Like that's kind of like the trade-off of you can get the better deal in the winter, but there's 4 times as many options available in the summer because most people are trying to time up that move from school district to school district without displacing their kids in some sort of weird way during school season. So, yeah, I agree. That's definitely a good takeaway.
What are you seeing here?
I continue want to see, up 9% new listings is great. But if you kind of look at the chart, which we have the line chart, if you're watching on YouTube, you can see this as well. If you draw like a straight red line across, it's still, I think I actually looked at this a week or so ago. We're still down, I think it was like 20 or 30% to what like 2019 February new listings were. So about a third of the new listings we would typically see this time of the year. That's, I think, really where we'd want to base that off of. And I'm pretty sure what I saw in the active inventory is it was like down 37%. So it's a considerable drop versus where we historically had been prior to 2020. But that's just going to have to be something that fixes itself over time. This is obviously just existing home inventory. There's some new home building, going out there, but maybe not to as good of, as much as we see in other bigger metro areas or more desirable metro areas like in Austin, Boise, you name it, all those places where everyone's seeing the headlines people are moving to. But I think that feels good overall on the MLS slides. Competition is still out there. I know anecdotally, we've both seen a double-digit number of offers out there, anywhere from 10 to 15 on some of these really desirable homes. Almost always what I've seen on the listing side of this is if you use a good marketing price, like a $299.9, right at the median price, right below $300K, you're going to get like half, if not more than half, that are like really close to the list price and really just not competitive. Potentially their agent didn't look at comparables there in the neighborhood. And you've got like 2 or 3 that are really good. So even though you're competing with 10, you're really probably competing with like 20 to 30% of the offers, not the whole stack.
Something too that whenever you're submitting an offer, always run comps. Because it's also in this market, if someone prices a home $40K under what the market is and they receive 15 offers, like you just nailed it. like this home was priced below market to begin with to drum up this sort of attention and all this like bidding war kind of feel, where it's like if you're seeing comps that are 40K over it, that almost is kind of the baseline of what a realistic sale price is for this. And you should be using that as your barometer, not necessarily the list price.
Yeah. And half the time it's brand new buyers that are coming out there that's where their pre-approval amount is.
Yeah, true.
And they're like, I'm so excited to get this home in Oak Creek with an acre. And, you know, it's listed at 300,000. Do we think I have a chance? And I'm like, well, the nearest comp that I found was 360. So I honestly just felt like that agent did a huge disservice to all parties, but that's neither here nor there.
Yep.
Next up, we've got our two-family space in all of the Milwaukee greater area. So this is a change from what we've done before. I finally figured out how to work some tools in the MLS.
Love it.
So I'm super excited about this.
So we're just looking at Milwaukee County here.
This is all of Milwaukee greater area, Milwaukee, Waukesha, Ozaki, as well as Washington County.
Cool.
Those 4 counties, however, most of those listing opportunities are in Milwaukee and Waukesha in terms of the number of listings. But this is great because one of the things we always talked about over the last 12 months or so is there's usually not enough data month by month to actually make good decisions on what's going on with pricing, specifically of, hey, our price is going up or down. This is going to introduce significantly more active new listing as well as pending listings into our data set, which I'm pretty excited about to actually give more insights to our listeners out there. So absorption rate, which is months of supply, sitting at 1.7 versus 1 month of supply last year. So that's up considerably, but still down, is still significantly less than what we even see in the single family space. I know that you do a ton of buyers in this investor space. I do a fair amount of investors as well. This is exactly how it feels. It's like if somebody told you you're buying a single family in West Dallas, you're like, ooh, it's going to be competitive. If they're like, I'm buying a duplex in West Dallas, you're like, wow.
More competitive.
More competitive.
Yeah.
And the months of supply show that. So that continues to be our best marker of what's going on, supply, demand. Median list price, we've got $149,000 versus $139,000 a year ago, up 7%. That's going to relate to essentially what we have on the median sales price. Holy cow. Oh my gosh. So now that we have more data.
Yeah, this is fascinating to look at. I'll let you roll through this. I got some thoughts here.
So the median sales price is $218,000 versus $141,000 a year ago. I'm just going to say it now. I was excited about more data and exciting data. I think that this is probably going to be a mix sort of situation. I'm interested to get your take. I bet your take is the same as me.
Well, so I think about too, like median versus, well, I guess we're looking at median list price, median sale price. If you all it takes is a couple jumbo duplexes that sell. This is a 60K, 70, 80K increase from last year to
year
this
over year.
I know that duplex values
count that money,
knock on that up. So if you bought a duplex last year, don't be thinking that you're sitting on 55%.
No, actually, call us. We'll list it for you for 50K more.
I think this comes down to the mix of what was in here, what sold in February as compared to 2023. What are your thoughts though?
The median list price feels indicative of like the price growth year over year, up 7%. Now, what I think is happening here is the price point above the median, so 218 and above, typically better quality, maybe better locations in terms of, the desirability. Those are trading faster, and they're coming off the market. So there's a lot of duplexes being listed around that median of 150. The ones that are closer to that 150 number are not selling as quickly or not at all because of their condition.
Well, let's look at the next two lines here.
Yep.
So we have average days on market, 41 days.
Yep.
The median days on market, 8 days.
Yep.
So if you look at all the sales, add them all up, divide by the number, 41.
Yep.
If you take that middle number, though, you're at 8 days on market.
Yeah.
So, you have some old inventory that's selling. That's
Absolutely.
way over 41 days. But the typical property is selling around 8 days on market.
Yep.
That's a massive discrepancy. And this kind of matches, too, with a lot of that old inventory. If you think about it, is kind of where the average sale price was last year, 185K. But then the properties that are selling at this 8 days or less, which is your median days on market, are probably priced closer to that 220K mark.
Yeah. And I think what the best number to run away with here, if you're trying to Ty, Nick, nail down a number for me. How much has my duplex gone up year over year? Because I bought last February. Let's look at the year to date, price change, year versus year. 2024, $210,000 average price versus last year $185,000. That's up 13%. Last year in 2023, duplex prices I think went up either up 11 or up 13%. So that seems to be continuing the norm. And again, we're using a different data set. So let's go into what's active out there. We've got 225 listings versus 180 a year ago. That's an increase in the active inventory available. New listings, we've got 160 new listings versus 140 a year ago, up 12. It's actually good to see even more new listing inventory in the duplex space, which is even more starved of options than the single family space. Pending, essentially the same, 100 versus 100 a year ago. And then finally, sold listings, up 13%, 120 sold last month. So we're seeing some positive momentum here in the duplex space, more of them coming available. This is the space that we kind of mentioned several times that are there really going to be a lot of people selling their duplexes and their small multifamily that they bought in 2022 or sooner when we had sub 4% interest rates? I still think that like recovery in the months of supply, currently sitting at 1.7, I don't think that we're going to see that improve or get closer to 4 months of supply as fast as what we might see in the single family space. I think those are long-term holds that are going to be hard to get back into the market. Now, unfortunately, I don't have the ability to do all of the counties unless, maybe I'll do a special edition next month and pull it. But Milwaukee County rents, right now, we're still sitting at the average right around $1,220, median $1,150. We've seen that be relatively stable in terms of the rentometer report. Obviously, we've got our Zillow report that we dive into a little bit later as well, showing that we are seeing about 5% in rent increases year over year. But let's take a quick pause. What other stats are you looking for more information on? Ask us in the comments below. We'd love to get your take on what's coming next in the real estate market. And with that, news headline time. We're going to do, I guess I'd call almost a special edition here. We're going to do more of a deep dive into something that's definitely top of mind here in the real estate industry, and it impacts buyers, sellers, investors, real estate agents, as well as real estate companies, in addition to, we'll just call it attorneys, and them pocketing some spending money. Let's call it. So hit us with it. What's kind of like the new news here in the month of March 2024?
Yeah, so as of, I believe it was last Friday, 2 Fridays ago, basically NAR, National Association of Realtors, reached a proposed settlement with a class action lawsuit that broke wind, I believe it was like about a year to 2 years ago. And essentially there's a proposed ruling that's going to go into effect in July. It's pending judge approval. Essentially, the headlines that you're seeing are kind of what they're basically saying is that they're going to go ahead and talk about what it actually is.
How it works today is when we go meet with a seller at their home, we bring our listing agreement paperwork, and on the very first page there it says, what's the property, who's the seller, what marketing are we providing, and what's the total commission being paid. There's also a sub-agent line, and we'll pull up like a screenshot here so people can see in our MLS what it looks like today, and essentially what's changing. So, a lot of times you'll see 6%, 5%. The seller actually negotiates commission already today, even though some of the articles maybe make it sound like it does not. But usually you're negotiating, here's what I make as your listing agent, but then here's what we're giving to the other side, essentially the buyer's agent or the sub-agent for providing a service of helping us sell the property, and you line on that total amount. So pull it up on the screen. Essentially what's going away as part of this proposed settlement is they just have to take this little box inside of our MLS and delete it.
Yeah, and so that's on the listing paperwork side. And then when you go into our actual MLS, which is our system that shows you where all the properties are, it'll say what the sub-agent commission is, which it'll say what is on that listing contract, which has been pre-negotiated between the listing agent and the seller. And so what's going away is probably this compensation to others on the listing contract, saying that we're going to pay the buyer's agent some compensation. And then on the MLS, which the average consumer doesn't even see that, us as agents do, the amount that's pre-negotiated on that listing agreement that the buyer's agent's going to receive. But it doesn't, it only states that it can't be advertised on the MLS. So any other marketing collateral, any other websites, texting, it can still be advertised. If there is a payout to the sub-agent or a commission to the sub-agent, it just cannot be advertised on the MLS.
Overarching, that's kind of like your quick cliff notes, whether or not it goes through or if it stays 100% the same of what you can go look up online. I would say, that's to be seen. I think there's going to be a lot of uncertainty and a lot of change. I think that's the one certainty, is that it's just going to be a constantly evolving thing over the next 12 to 24 months. But I think the other thing to be very watchful for, when I was reading a lot of the like news headlines, and I'll just call them what they are, clickbait, is there was a lot of, I would say, kind of misinformation of what this is actually going to do, because no one knows. And a lot of these articles were coming out essentially like hours from when this 130-page document was released, and all of a sudden they're blasting out all of this information that really no one had enough time to digest, unless they maybe just like downloaded it into ChatGPT and said, help. So here's a good article that we were shared. Name is Rob Hahn, and essentially he follows the real estate industry. And I'm going to take his takes because he knows more than I do. And I essentially just read other things that people post. And this is kind of what he has so far of what the New York Times and other articles are out there saying is, ways that the settlement could change the housing industry. Some bad takes, in his opinion. Home prices will drop. The 6% commission will cease to be the norm. Steering will be less common, meaning an agent steering a buyer to one listing over another, and that 1 million real estate agents could leave the profession. So he notes that as a bad take. Mm-hmm. And we're probably not going to like go back and forth and say like what our opinion is necessarily on each of these things, mostly because no one actually knows what course it's going to take.
Yeah, no one knows. And I think like the big impact is that, let's just go with the market real quick. Home prices will drop. I've seen that come up of like, how is the market going to react to this? Listing agents are still going to have a commission to list a home. Buyer's agents are probably not going to work for free. And there's going to be some compensation that they're either going to take from the buyers they're working with, or it's possible sellers will offer some compensation to the buyer's agents. But I don't see the market reacting to this in any sort of price drop. We might see maybe some listings hit the market, maybe, that aren't offering compensation to buyers. But at most, if we see any price drop, I'm predicting maybe 2%. Maybe.
2% versus how much prices are going up right now, which our market's going up 6 to 10%. So
yes.
Does it slow down? Maybe. I still see it as an unlikely case. And yeah, I would say overall, I think the big thing for people to summarize this is like looking at the parties of like who's involved. So like the market, we'll see where that goes. Like honestly, I think there's bigger factors that are going to drive the market than the commission, because I think two things that I've been telling most people here is things are not going to stay the same, but buyer commission is also not going to go to zero. I think those are two certainties that I feel really confident in.
Yeah.
But like, let's actually talk of like who's impacted in this, and generally in what way, at least in how we're reading here, black and white. Attorneys made a lot of money. Step one. Sellers probably will have the opportunity to negotiate lower fees for themselves. So I would note sellers as being a winner.
Yeah.
Buyers, I'm going to go ahead and just put them in the seat of being a potential loser. I mean, I'm not going to say they're going to be totally screwed and have, no options, and they're going to be in a tough space, but you're probably going to see that your closing costs will increase as a buyer as a result, but it's going to be dependent state by state, metro by metro, listing by listing in terms of what that does. So your agent has become more important, and some agents might end up losers, potentially ones that are working in a more part-time fashion that don't have a really clear way to articulate their value other than, me, I'm your aunt, or I'm your uncle.
What do you mean?
Because now negotiation has become a much bigger role. There's different states out there, some where the agent is the main negotiator, some states where you actually hire an attorney for your negotiation. That could be two different varieties of how much does your agent do during the transaction versus one that's maybe attorney-led. So those are like the intricacies, at least in terms of like the bigger parties. Now, I think the next thing I want to go into, and maybe you can talk a little bit more about, is every state's MLS or like association of realtors body is actually unique. Yep. And we all have different legal forms. We all have different practices and ways that we go through. Maybe talk a little bit about what we know about what's going on and why this is coming in nationally versus what we do here in Wisconsin.
So you're right. Every state has their own governing body that basically regulates how realtors operate day to day. And there's even regional bodies that operate. Like we are part of a local GMAR association, Greater Milwaukee Association of Realtors, which we're also part of the National Association of Realtors. So there's different like hierarchies of regulatory bodies that control how we operate. And Wisconsin, in my opinion, is a very transparent state that clearly articulates what gets paid to who and who pays what and what the percentages are. But in other states, we don't have that transparency.
Yeah, and essentially the numbers is there's about 15 other states that are similar to Wisconsin where there's already like a designed either disclosure to a buyer customer of, what we owe you just as a person that we meet on the streets that wants help with real estate versus what's owed to a client and how we get compensated. So only 15 or so out of the 50 states have something that's actually a requirement already. That's essentially what the NAR is looking for across the board. Now, the slight difference is when we meet a customer at a showing today, we just have to let them know we're a real estate agent, and we do get compensation for working, some intuitive stuff. But now what they're wanting to do is front load it. Essentially, before you even engage in some sort of real estate activity like showing a home, shouldn't your buyer be interviewing you and most likely other real estate agents before you start showing them home, maybe giving them advice or talking about why this might or might not be a good home for them? Actually makes a lot of sense and is going towards professionalism, professionalizing the industry to compare to other professions.
Because I think about how the average person finds a realtor. They might find them on Zillow. They might find them from a website, maybe Instagram.
Open house. It could be a referral.
Like, hey, I use this agent. You should use him. I recommend him a lot. But I believe it's 90% of home buyers and home sellers use the first agent that they talk to. But if you think about other similar types of industries, a CPA, a lawyer, a financial advisor, more common than not, you're going to be interviewing to understand what can they offer, what services do they provide to you, and also what are their fees? Like, how do I pay you if I'm going to be doing financial services with you, which is incredibly important in my opinion. And that's what this is going towards. It's creating better transparency, and it's things that we've been doing for a while, but it's also helping to level up the playing field of realtors across the board, in my opinion, too.
Yeah. And I feel like this kind of like summarizes my take on how this is going to change is we're very firmly today in a seller's market. And a lot of people have the opinion that if you list your home, it sells. Now, we've seen plenty of homes where that's not the case. That's not the 100% certainty, but there's a lot where why should I compensate you this amount because the work doesn't seem to reflect itself? However, that's on the seller side in the seller's market where there is infinite buyer demand. I'll call it at least here in the Milwaukee area. But you better believe there's a ton of value that goes into what a buyer's agent does today when they're navigating getting to showings successfully within 24 to 48 hours when it goes live, regardless of what their life or schedule is. Educate them on strong offers that still protect them at the same time, and navigating them through the negotiation process and negotiating. And a lot of times, thousands to tens of thousands of dollars worth of value. The buyer's agent has a very clear and obvious need in today's market because it's a seller's market. You need more support. However, you look 10 years ago in the great financial crisis, there was abundant listings. Banks were begging listing agents to list these properties, and buyers could just go on a little shopping spree over the weekend and look at 10 homes, and they take their pick. There was not as much competition. That was a buyer's market. Well, guess who needed really good support? Sellers. The listing is, there's always an ebb and flow of where our resources are needed. But guess what? Most agents don't just do listings, and most agents don't just do buyers. Like your situation is going to depend on what you need and that complexity. And to bring this around to like my thought process is people do their own finances. People do their own taxes. Now, I would say people who have super complicated or challenging taxes usually hire a CPA and a really good one, sometimes a specialist, like an investor specialist, just like an investor buyer's agent, or somebody who's focused in relocation. So people will go seek out that professionalism when they have very specific ways, and I would say most people go to those professional industries to get that expert. And that's what people will come to expect out of our industry, and I think it's a good thing for both clients and for agents that you get professionalism from day one, and you interview people and you know what they offer and you know how the process is going to go versus the Wild West of hopefully I find a good agent at the first showing I schedule and I hope that they have a plan because I'm not even sitting down in a meeting with them before I start going on multiple showings.
Well said, man. Well said. And I think like the biggest change, in my opinion, that we're going to see here is the home buyer and how they buy homes.
Yeah.
That is like going to be that's the biggest shift, and so we're now going to be moving into a space where it's expected for buyers to be paying for their agent's commission. Mm-hmm. And so that's why it's more important than ever to find an agent, first off, that you like, that you trust, but to have that conversation on the forefront too, to understand what does that look like. Some sellers still may be offering some compensation to buyer's agents. It won't be on the MLS, but that still may exist. But it's what happened to the loan lending industry back in 2008, 2009, where they created this massive transparency, which there should be, I think though, like the 6% commission, that is like the headlines that people see everywhere, there's still going to be a fee to list a home. And buyer's agents aren't going to work for free. Yep. So there's still going to, maybe it's not 6%, who knows what it's going to be. Yep. But we could also start to see a shift of people leaning more into, I can do this myself. I can operate here. I just need a lawyer to help draft up agreements. We'll definitely see a market of people move into that space. We'll probably see a market emerge of buyer's agents that are willing to work at a flat rate for way less than other people. So it'll be interesting to see kind of how all of this takes shape in the future. But yeah, I think it's expected now that as a home buyer, you're going to be paying for your buyer's agent's commission. And it's important to talk about that, understand that, and feel comfortable doing so too.
Yeah, and I think it's knowing that your closing costs are going to go up, commission being a part of it. But I still think it's very unlikely that in most cases that the buyer is going to take the full brunt of that. The main reason being, if I'm sitting here as a listing agent advising my seller, does it really make sense for us to offer nothing to somebody who is going to be navigating this transaction? And I know we see it a lot today on the buyer side when we run into a flat service, type company where it's essentially they've listed the property online and the seller navigates the situation. It's clunky. It doesn't work super smoothly. Sometimes there's misinterpretation that makes the process not go as well. A lot of times the buyer has an upper advantage in negotiation because it's what we do as a career. If you flip it to the other side, I would be super nervous if I was selling my own home and I knew that there was like a limited service buyer's agent and this buyer not being guided through some of the best practices, what they can realistically expect, what they can even ask for in the first place, because that's part of like what they get is they get the inventory of all of our experience of, in this case, we can ask for more. Or in this case, we might not be able to ask for as much, but this is the best way to navigate through and help you. And like, make sure you don't get like sued. like we're not here to be attorneys, but we're here to navigate through like what you can and cannot do. And I think compensating the other side appropriately for the service that they will provide, because it's a lot of work taking a buyer through that journey and making sure that it's somebody that's actually worth their salt is important. Yep. And the way that you articulate that to the to the seller as a listing agent is they're performing a service. I can list and get traffic into your home. I can get traffic all day. That's my job, is to drive traffic. However, I can't sell your home because I'm not at the appointments with you. What are the resources I can get, including good compensation for good agents to sell your home? They're an extension of me using the resources I provide to get the job done, and we need an expert to do that, not Joe Schmo off the street.
So, well said, man. Well said.
Absolutely. What else? What else can we dive into on this NAR thing? Because I'm sure we'll get questions. But.
Yeah. Do you have any thoughts, any final takeaways, any other headlines you've seen that kind of speak out to you?
The only last thing I'll say, and it goes around what we said, like if the advisor is something that a lot of people might note or that they see in a bigger news article is, 6 commissions are gone because other countries only charge 1 to 3%. I saw that several times in several articles. What's really important to know, and this is what I love about the state of Wisconsin being here in Milwaukee, is there's very clearly a delineation between who is representing the seller and who is representing the buyer as fiduciaries. What other countries don't have, I'm not going to name like specific ones, I don't have the full list, that 1 to 3% is exclusively just going to the listing agent because there are no buyer's agents. There's no representation on the buy side. So yeah, you can go to the listing agent, but you better know what the heck you're doing. And most attorneys are not trained in like the intricacies of like what actually happens inside a real estate transaction, unless you're in an attorney state where they do it all day, every day. So that would be like, there's a lot of clickbaity like things that might get you fired up. Like, yeah, why are they making so much money? And it's like, That's because we're doing twice as much work as some of these other countries, and we're providing a service, which is representing a buyer, buying hundreds of thousands of dollars, sometimes millions of dollars worth of property, and they're assuming the risk of that property, and they better have good representation. Otherwise, I guess you get what you pay for.
Yep.
And if you're paying for nothing, you're going to get nothing. So that's what I got on that. But we'll dive back into the list here. Dive into some of the national topics, getting some even sexier stuff, like what kind of inventory.
What's happening in inflation right now, man?
Yeah, we'll dive into some good stuff like inflation and some, different stuff like that. So total inventory across the nation right now, we're sitting at about 664,000. Outside of seasonality, we have seen some stabilization of this is kind of like the new normal of that 600 to 800,000 listings being available nationally speaking. That used to hover between essentially 1 and 1.4. Mm-hmm. So very similar to what we see in our Milwaukee market, about half as many homes floating out there for people to go and acquire, to purchase, than what we've seen in the past. Also in the consumer, the index, purchase price index for new mortgage applications, that's bouncing up and down. It's still kind of at lower levels. That was the big headline several months ago, and we've seen a little bit of recovery. I mean, I never noticed any difference between pre-approvals and how much demand actually came out, but neither here nor there. Getting over to our Zillow data, so the Zillow home value index for that typical home, Milwaukee's still kind of sitting in that top 10 at 7.5% growth in price year over year. Again, this consistently has tracked very close to what we're seeing in our local MLS data for all homes, going up right around 6 to 10% year over year. And then the rent index, I think that I saw we dipped just below 5% to just around 4 and some change in terms of rent price going up year over year. We saw those be a little bit more tied for a little bit of time. Yeah. Now we're seeing home prices go up a little bit quicker than we're seeing the rents. So potentially some opportunity as we maybe wait for a little further relief in interest rates to maybe continue to rent while you wait for the right opportunity. Then going into our inflation data, I feel like every time I listen to one of my other podcasts that talks about market data better than I know how to, they're kind of freaking out oh, is it back? Inflation. The most recent take I took, so first stating what the number is, we sat at 3.2 in the month of February versus I think what the forecast was 3.1 to 3.2, so slightly higher, if not right on point. It's been relatively sticky right around this 3% mark, which is, I think, fine overall. As we go to our next charts where we actually break out the different buckets from, all items versus, the core inflation, taking out food and energy, we're sitting at 3.8. So core has continued to get closer and closer to the total. And we continue to see shelter, dip down just a little bit more, now down to 5.7. I think even within the last 12 months, we were almost at nearly 8% in terms of year over year shelter costs. So my thoughts on this is something I heard this morning, is if you took shelter out, which is at 5.7%, and it makes up, I think, a third of all of inflation is that shelter bucket, it essentially would get our inflation below 2%, which is the Fed target. And that's where I think a lot of the conversations of the Fed continues not to drop rates. Now they're talking about June, August, and October, some future rate cuts for the Fed rate. I think what we're seeing there is the Fed is going to do some cuts, but they're just going to keep on talking and seeing if they can continue to drive some consumer sentiment that way. But we will see where that heads, but it feels like we're getting to kind of a soft landing was the word that everybody used. Yep. I like interest rates in the 6s. I like that inflation ticks down a little bit and the shelter is ticking down a little bit, and there's nothing drastic. And I think that's usually what our message is everyone likes a little bit of consistency, even though the news headlines and articles don't always show it.
Yeah, I think what consumers want is stability. At the end of the day, we want something that we can predict. And so looking back at the national inventory numbers, the Milwaukee numbers, everything interest rates, we want things to be sticky, and the longer things stay the same, the more predictable the market gets. So obviously we'd all love for rates to drop, but we just don't want to see a crazy fluctuation week over week. That creates headaches for everyone. That creates news headlines that creates like a speculation in the market of what's happening. We'll also see too, it's a election year.
Yeah.
You know, I feel like everyone predicted that rates were going to drop significantly by this time, and they haven't. But we'll see as like we approach the end of the year if there's any changes that come from this year.
Yeah. It'll be interesting to see. I mean, I never get the political argument. I know there's a lot of things that go haywire in the industry out there, but it's like 50% of everybody's rooting for one side, 50% for the other. Like, how do you determine who wins? Do we make it worse this time or do we make it better this time? Like, how does that work? I guess I'd have to talk to somebody that knows a little bit better about conspiracy theories than me. I feel like more or less, I think what happens is people just don't take action during the election time frame because they're just worn down by texting and calling and mail.
My first call already this year.
Your first call.
Yep.
Was it Joe Biden on AI?
I hung up before I got too far into it, but they're coming.
They're coming. AI calls are coming.
Yeah.
All right, let's run through some mortgage rates real quick. We're at 6.9 versus a year ago. The average rate was sitting around 6.4. Consistency. I'm a big fan. I want to see that consistency. It's better for my buyers. I was just talking to one of our lender loan broker partners, and he was locking people in earlier this week somewhere around 6.25%. So those are the advertised daily rates, but what you typically will see is that a loan broker, a lender can usually get better rates, especially if they're a smaller boutique kind of shop. Then we get to the unemployment area, which kind of speaks a little bit to what the Fed's kind of monitoring right now. It's looking pretty healthy. I think that's the one thing when everyone's saying, why has nothing broken? Why is everything not going into a dumpster? We're sitting at 3.9% unemployment rate. It's been relatively stable for just years on end at this point, essentially post-COVID. And, Wisconsin, we're faring even better at a 3%. And I think usually what we find is you don't start seeing anybody really getting too concerned until you get to the higher 4s into the 5s in terms of unemployment. So that's some of the bigger stats that we track. Is there anything else you want to add in terms of just like some of these bigger, headline numbers that people track?
So I think like we talk about inflation quite a bit, and it's good to see inflation go down. But if we look back at the average cost of a good from 3 years ago to now, sure, inflation might be at 2%, but that's 2% from where it was before, which was 3% of where it was before, which was at 1.8% of what it was before. Yeah. So I'm just looking at year-over-year wage changes in the workforce, because I think that's kind of an interesting thing to check out too.
Yeah, absolutely.
How does like the income that people make compare to the unemployment rate, compare to also the inflation rate? Because it's all it all comes together, know. And so right here we're sitting around 4.8% year over year of the average wage increase. And if we look back to 2022 to right before 2021 as well, it's been kind of hovering around that 4 to 5% of annual wage increase year over year, which is higher than what it's been. If you look from 2008 to 2022 or 2020, it was around like 2 or 3%. So it's on average higher, which high wage earnings, wages going up every year, low unemployment, and more targeted inflation too of where they want it to be. So I think, I don't know, soft launch, soft landing. Soft launch.
Why aren't 6% commissions going up 4% per year?
I don't know. Is that the headline we should be talking about?
I suppose.
Are commissions not enough?
Yeah, commissions aren't high enough. That's, I think, what we've landed on
6%'s
here.
gone. 12% is the new.
12%'s the new norm. We were talking to somebody. Apparently, the new industry to get into is yacht brokering.
Oh yeah.
Yeah, 10% commissions.
It's too high.
I don't think anybody's crying about people buying yachts getting charged too high of commissions.
Yeah.
But with both like the news headlines as well as what we kind of went through for some like the national topics around inflation, mortgage rates, everything else, how can we best be helping our clients adapt to what potentially might become a new normal? I feel like most of this is just noise and things will settle into place, but it's going to be a lot of just articles and probably a ton of Instagram stories from, real estate agents just like making a lot of funny memes and people being like, I don't even know if this is different or the same as before, but it's going to like cause questions.
Well, I think it's also like, how many buyers do you work with where you articulate how you get paid and they say, I thought I paid you in closing costs anyways, and so that's a prime example of like what the industry is now solving. Biggest advice, obviously research. If you're looking to buy a home or sell a home, read articles, but just know that a lot of them are sensationalized and it's noise. and a lot of this is going to go away, and everything's going to be okay. Like, I don't think as a home buyer you're going to save much on your home. As a home seller, you may be able to save 1% to 2% in your closing costs, but it's not like all of a sudden now you're going to be in a way better position buying or selling because this new ruling came out.
Yeah. If your agent's freaking out about this, they shouldn't be. And I'd be concerned if they were, because the big thing overall is even if there's a portion that the seller is saying that they will not cover, we can negotiate credits and we can negotiate into the deal so that you can lower your out-of-pocket cost. Now you're usually paying for that in your price. You're usually getting that inside of a loan. Be aware of how that impacts you financially. Have those conversations with your lender. Like, you're going to see increased costs of buying a home. Unfortunately, it's not everything it's drummed up to be that prices are going down and it's going to be more affordable. That's unfortunately just not looking like the way that it'll go. And on the seller side, like, I would say, don't be opportunistic and not really see the true value of what the entire system does for you in the process. Like, there's a reason that for decades it's been relatively the same, though needs a change. Like, that is like abundantly clear that most states should be operating the way that Wisconsin is and the way that Milwaukee is today. And I'm super happy that it's going that way. And I'm happy for our industry as well, for both, you know, the buyer clients, educating our seller clients, the investor clients, that I would love if essentially there was a forced, you have to meet with me for 30 minutes before we go do something, because it's so much better for the consumer. And I think that's what I'm super excited about, is how much better I can serve my clients instead of trying to drip bits of information to them on each showing, on each like phone call, and like it's all just coming at different ways. And did I miss a step because we're not sitting and just going through it in a very organized fashion, low pressure? Here's my offering. How can I support you? Am I the right fit? So I'm super excited about that.
Cool.
But with that, what's new?
What's new, man?
Nothing.
Nothing, dude. What is new? I've been traveling quite a bit. I was in Deadwood, South Dakota.
Okay.
A couple weeks ago.
Sweet.
You been there before?
No. Well, I might have. I was like 2 when I went to Rushmore. So.
Oh yeah, it's Bozeman, Montana is where we flew. No, not Bozeman. Rapid City is where we flew into in South Dakota.
Looking to Sam to help you out there for
Sam,
the
help me
lifeline.
out. Come on. We did not see Mount Rushmore. I heard it's a very underwhelming landmark. I heard it's very far away. If it's cloudy, you can't even see them.
You remember when we've talked in episodes before where it's like sometimes the advice you get is not meant for you?
Yeah.
You probably shouldn't have taken that advice. You probably should have gone and seen it.
True. 4 guys. I did see a pretty funny magnet.
How many other times are you going to get to go back to South Dakota? It's like South Dakota and like Asia. It's like those are 2 really hard places to get to.
Hopefully few. I did see a pretty funny magnet though at a gas station where it was Mount Rushmore from behind, and it was like the presidents from their backside, and they all had like funny underwear on.
Nice.
So that was.
I used to live in South Dakota for a year.
Really?
Yeah, I went Sioux Falls.
Oh, I'm going there for a wedding. I was there for a bachelor party.
It's cool. I think the stat back in 2012 was that they had the most restaurants per capita than any other city.
Wow.
But it's like they've
Chili's.
got they've got like 4 Taco Bells for like a population of 100,000 people.
Yeah.
It's super, super cool.
Nice. I'll have to ask my friend about that.
Yeah. I mean, I'm sure it's way different from 10 years, and I was also 18, so it's not like I was an adventurer or anything like that. I pretty much was eating peanut butter jelly and ramen in my dorm room.
It's a good meal.
Yeah, absolutely.
How about you, dude? What's new?
I'm trying to think of anything that I did recently. I feel like the only thing that really comes to mind is my sister and nephew came up from Des Moines to visit us for a long weekend. I went to, actually, this is probably one of the coolest things I've done in a while. We went to the Milwaukee Public Museum, and they've got this awesome exhibit of like the streets of Milwaukee. And it's like from...
Oh, yeah, I've heard about this.
Yeah, it's from like 100 years ago, Milwaukee, like as it was growing, and it's got like, old buildings. Like it's got like little, what do they call them, Easter eggs of like singers, like hidden treasures, or like little things like a Sendix you'd be familiar with, one of our local grocery stores. They've got like a little cart, because literally 100 years ago, it was literally a guy that rolled around fruit and veggies on a cart.
Cool.
Yeah, there's some cool things like that, the other classic museum things, but yeah.
It's also kind of funny that like they have a museum of Milwaukee in like the 1900s, but then most of the inventory in Milwaukee is still built from the 1900s and it's still standing. So it's kind of like walk around like the east side. There's certain streets where it's like, yeah, this is probably exactly what that museum looks like.
Yeah. So, I mean, it's cool to see all that, and I like reading signs, so like on nature hikes, and they're explaining like what kind of tree this is, or how this tree came to be. I love reading the signs, so I'm a big fan of that.
Nice.
Yeah, but
fun.
Yeah, that's all that I kind of had going on. But with that, if you found value in the information that we just covered here for the Milwaukee area, please subscribe, hit that bell notification button so we know, so you know when we post our next market update. Thanks. We'll be back again next month with the Milwaukee Market Update.